Lo vuelves a poner en su crate, por favor, cuando salgas, ¿ya?
Ya, pa.
Ya anda haciendo la caca por toda la casa esa perra.
Ok, ok. Sorry, mamá. Ya. Mira. Chao, pa.
¿Ya te vas, hija?
Sí.
Son 8:20. Ok, ya, hija. Que tengas un buen día.
You too, pa.
Me llamas cualquier cosa, ¿ok?
Yeah. Have a
Yeah.
good day.
Don't walk to the school, call me.
Okay.
Hello, hello, good morning. Welcome to another ESP Trading streaming video. Today is Wednesday, September 13th. It is 8:24 a.m. Eastern Time in the US. We are just minutes away from CPI release, which is an important event for traders, for short time frame traders. And the market is in this peculiar, very interesting situation here. Really interesting situation. What happened? What we have here? This is the September contract. This is December contract. There is still a lot of longs in the September contract that can play a role in what happened or what may happen in the market. What I mean with this is unfortunately there's a strategy that is used quite often. Very popular among traders, which is selling naked options, which I learned from Jim Dalton. When you hear the explanation of this, is quite dangerous. For me, it's the worst strategy that is out there. It seems like easy money. It's a strategy that has a high percentage winning. You win most of the time, but you need only one trade, all right? Only one trade to take you out of the market, to take your gains, all the gains you have this year, the previous year, sometimes the career-ending gains. Right? All the gains that you have early throughout your career can be taken in just one trade. It's quite dangerous. It's a black swan event that can happen there. The confidence the traders gain when they have high percentage wins is okay. Doesn't seem that dangerous, but it is very good one. You gain a lot. You gain little money. You gain 20, 50s. But when you lose, you lose in the thousands. Sometimes it's incredible, sometimes in hundreds or millions. What happened here in this market is, notice how the monthly is trending down, but in balance. We have a balance, we have an inside balance. Balance also in the weekly 1, 2, 3, 4, 5, 6 week balance, including this one, is breaking out the balance this week. And the daily one time frame higher has ended. This gap is a fixed issues. This is not a gap here. This is just Tito's doing the rollover process. Try to use only one chart. This is not a gap, right? And what happened with these naked options selling? It can happen traders, when the market was here, sold these options or above this. The market is not going to come back here. Or when the market was up here, they sold these options that were below this. Now, the market is not going to go that way. And right now, the market is 2 days before the contract expires, which is Friday, 9 a.m. The market is right at center. It can go in either direction. It can go to the upside. It might have a huge rally here just for the rally to be retraced, or it can have a gigantic break here just to recover the next day or even in the same session. All right, that's a possibility. That's the risk, or that's the scenario where this option naked, when this trader selling option naked options strategy could come to play. Now, what we have, that's why I still have September contract open here, is because this market had no excess here, very bad lows in the lower side, and the weekly, this 44.23, this weekly low here, it seems kind of like far, but it's not that far actually. But if the market takes this low, what that will do is change this chart. It will pull this chart to the downside. That's what I have highlighted this way in my charts. Now there are just seconds to the release. Let's see what happened. Look at that. Oh my God, look at that. This low has been repaired. Now the next one is this. This low is not good here. Meditating market, this low is also not good. Notice notice this September contract where this market has been bought from. If I open this profile, this is very weak. No? This was bought a half back. This also was bought a half back. It is right there. This is all adding just another weak level to this level. What I'm trying to see here is what the market does, where the market opens today relative to this spike to the downside. There's a quite significant gap here. Remember, the overnight does not repair these lows here. This low is very, very questionable here. The current low, and that's what I have. I guess I already say this. That's what I have. The September contract here. Does it have the strength to keep going lower? This is the volume on the December contract. Notice how low volume the September contract has. Look at where the market has stopped here. Right here. Right here. Right here. Held back. Which was held back at the time. The market is short, inventory is very short. It was short before the spike. Notice where settle is. Notice there's a lot of trading in this area. This rally that happened at the closing is a classic rebalancing of late inventory. Notice how the market broke here. This is a rebalancing of this short inventory here. And what happens is traders tend to believe, okay, the market is going to rally now. I'm not saying that it's not going to happen, okay? I'm not saying it's not going to happen. Now, what I have also from yesterday is this break, actually, okay? Because what happened here, we have Apple, we have a spike here, we have a spike here when I guess Apple was happening, something was happening with Apple, and then also I guess this was a buy the rumors, sell the news event. When Apple, I don't know what happened with Apple, but something happened, and then we have this rally. I mean, this break. And usually, when you have a rally or a break that is triggered, that is started, that is ignited by any kind of news, usually that rally is reverted really quite fast, right? In time. But it could be the same day, maybe the next day. In this case, I have that scenario also in mind because it's Apple. It's not something bigger, something that may have some geopolitical relevance, for example, which could be news, for example, whether there can be China invading Taiwan or Russia doing something in Ukraine, things like that. Now notice how far this spike has been retraced. It started here and now we're way down here. Notice how, man, this is just crazy here. There's nothing here. Just buyers just disappear here. There's no buying. You can notice how little selling pushes the market lower. Just the buyer disappear here. Huh? It has a good rotation. It put the market back inside its range. Huh? Now, I told you earlier that my focus is now that the market has a spike to the downside, where the market is going to open relative to the spike. Opening down here is neutral. Right? The market has not accepted the lower prices, not rejected lower prices. Market opens up here is a sign the market has rejected lower prices. Opening down here is a sign the market is accepting low prices. And this is just craziness. It's very hard to trade these kind of movements. Just keep in mind this. I guess the market was around what it is right now, before when the news happened. Now, three things can happen if you have a position trying to up from any kind of movement. The market can go against you, the market can remain neutral, or the market can go in the direction of your trade. Now, what are the odds, right? You do the math there. 2 out of 3 are against you. So you have 66% chances, or 70, something like that, that your trade is not going to work. Only 30% chances that that the market is going to go in the direction of your trade. Those are really low odds to play with. And the danger of this is if the market moves against you, it's going to move really long distances. And the losses that you may have are extreme here. Just let's assume, for example, you were long. Oh, the market is going higher. The market is made it low. The market come back inside here, and the market is higher now. I'm going to be long. How many points? These are almost 20 points here, from here to here. That's a lot of money that you are risking there. No? And the risk actually is not the money. The risk is the location. Right? Understanding the risk. You are taking a trade that has 30% odds of working. That's the risk you are taking. The risk you are taking are not the potential 20 points that you can lose. But there's another way to see your risk, to measure risk. If the way how you are doing is not working, you may consider, right? Just may think considering another way to do it. Now let's check what's happening in the bond market with this movement. The overnight has the overnight I was checking here this market. The overnight was multiple highs here. Notice where these bonds were coming from, on this level, exactly was very crazy. Right? That has been replaced. These stops have been taken. You have more here, even more up here. Now let's check how this is doing today. Look at where this market has been bought. Again, very close to this level. I see it looks like the market the bond market started to go lower, and remain. It's exactly from this level. Oh my God! Exactly from this is not a good low. I'm not saying the market is going to come through this today, but this is not good. This is not good. This cannot be good. The 30 was even weaker because you could see, right? 1, 2, 3, 4, 5. Oh yeah, it is onto 1, 2, 3, 4 lows here. These stops have been taken. Going lower needs volume here. What's happening? A lot of traders. The market was watching Apple as well. Apple's like that. Apple had the liquidation day yesterday. Okay. You got any questions? Please let me know. I have no intentions to place any kind of trade here. I'm just watching, observing the market. And traders don't understand, retail traders especially don't understand that trading, what being a trader means. Being a trader doesn't mean we are going to be trading all day long, placing hundreds of trades a day. The market will present itself with an opportunity, but we have to be aware. We have to be present in the market. If this is not your full-time job, if this is not your business, and if you do this on part-time basis, you have a job, a daily job, but you have access to a computer, coming back to the market every 2 hours, every hour, or checking, you are not focused. We cannot focus, and we need to understand that. We have to accept. But my focus is not 100% in the market, and I cannot, expect something happen, right? Because there's this belief out there that the market is, trading is just like an ATM machine where a place where we can go and just withdraw $500 in 5 minutes. If you look for any YouTube channel, you will see hundreds, thousands of videos that say how to trade, how to make $200 in 2 minutes, how to make $2,000 a week. Right? It is doable, but not in the way how they put it. All right? That kind of money is there, but it's just a business. It's like any other business. If you have a business, you will understand how hard it is to make a business profitable, how long it takes, how much effort it takes. to be in the market, to be present there, to understand what we need to do and the effort it requires. Well, we cannot keep 100% of ourselves to the business. Well, we need to adapt, right? And have passions. We need to have passions. Alright, this market is slowly pushing its way down. Okay. Now this looks different. This one looks better now. You got volume here in the upper side in this area. One thing is, I don't know if you remember how bad this was. You had like 10s here, 10, 20s, now at least you have hundreds here. Now is volume starts to accumulate here, and as the market goes higher, volume dries. The market went lower, and volume dries. As of 8:44, we have a gap. This is where the market closed yesterday. This is where the market is expected to open here the price. Now we are seeing it remains around here. What we have on the lower side is these non-excess lows. The new contract as well has non-excess lows here. It is good here. No, actually this is good low as well. This one is poor as well. The thing is it doesn't have volume. Monday, Tuesday, and Friday. Friday is when the December contract start to pick up some volume. We can check that. How much volume it had. Just check Thursday. This is December contract, 108,000. Friday, this is respectable. Almost 900,000. Monday, 2 million. This is a good volume now, even more than the September contract. Tuesday is a little bit lower, September, and December started to decrease. So there's a lot. If there's inventory in the new contract, here this day has a lot of volume. What the market did in this day, or what the market tried to do in this day, the market tried to go higher. Value went higher. PLC, what happened with PLC? PLC cannot be, but this is an aberration here. I mean, this is a nuance here. Can you see how this PLC sticks out? It is 6 period wide, all the way down up to here, from here. Oh, this is 6. Only this one has 7. This is very visible, right? Everybody can see it. And the same thing happened yesterday. This narrow range, 367 wide, and boom, got something here. It is just, how can I say this, noticeable or remarkable how the market stops here with this right below this area. It took a lot of time for the market to go through this high volume area, which is this highlighted mark here, and I couldn't take this one. This was the trade here. Down here. I took a short here when the market entered this range, but I need to improve my monitoring for continuation skills. I have considered the potential was this low, the potential destination trade, but I just closed it too early, man. I re-entered when the market took this low out, being this level my exit, but I couldn't make much there. All right. got any questions or comments, it would be really nice just to hear your opinion. What do you think about this action here? What's happening? Dun, 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 dun. This craziness. I got this. I read this book. This book, right by Nicholas Taleb, Fooled by Randomness. He says when he was talking about his life as a trader, is one of the things that he hates, or one of the things that he dislikes, or doesn't like that much, or dislikes dislikes more, is the company of all the traders. Because everybody has a mindset, everybody has a strategy. We can use the same information, right? We may see the same data the market is giving us, but we process that information differently. And our biases, our views, our ways to assume, to take risks are different. And we all process that information in a different way. And once we have an opinion on the market, hearing other people talking about the same market can make you think twice about what you are thinking. Because they might be right? They might be right. Because you can have an opinion, a negative opinion of this market, and have very solid, good arguments, and you can also have an opinion that says the opposite, with very strong arguments as well. Alright? And that's why it's important to have process, a thinking process, to form your opinion. And when you trade your opinion. You can be wrong, right? But you are going to be wrong, not somebody else. And you will be able to correct, to make the adjustments that you need to do to improve. Some information maybe will be irrelevant, you are going to process that. Some information you may have missed, you need to incorporate that. Some information may have too much weight or maybe overweight in your decision, and you need to process that. And you know what you are doing, but when you follow somebody else, you don't have that thing. You are wrong because somebody else is wrong, and we don't have a room to improve. At the beginning, it's important to have a mentor, to have somebody who can guide us in this process, right? And we start to repeat what this mentor can say. In my case, was Jim Dalton, right? And I started to repeat like a parrot what he said. Okay, the inventory is too short, the inventory is too long, the markets are lack conviction, tempo is low, tempo is too fast, the market went too fast, too short, stuff like that. But there comes a moment when you start to understand what you are talking, and when you discover what is the fundament, what are the fundamentals for those sayings, for that opinion, is when you make those words yours. And we all go through that process. And this is from Jim Dalton as well. There is a time when we were very afraid to leave, right? To leave our mentors behind. But it's a step that is necessary to take. Because if we don't do that, we will never take the next step, which is for our own opinion. Also, is in this time when the mentor becomes an obstacle, becomes a wall that is preventing us to move forward. It is quite interesting, right? This thinking how this happened, because it doesn't seem that logical. This is true. Everybody that is a professional trader go through those steps and can understand, can relate to this. If you have a business, if you have a mentor, you can relate to that one or to that thing also. And when we take the next step, when we get our own way of thinking, when we understand what our mentor mean, when they say something, we can go back, right? And the person who used to be our mentor becomes a weak equal, right? It doesn't mean that we're going to be better, but we can see him in the eyes now. He or she is still a person that has a lot of experience, a lot of practice, and can be a role model. And we need to go also, role mentor. Once we have a mentor, we need another mentor afterwards. And what kind of mentor we pick will depend on what kind of improvements we need to do. Because it is one thing understanding the market, understanding the dynamics of the market, and it is another thing learning to trade. How we trade, which is the part when we formulate our strategy. We start building our strategy. That's the thing. That's the new thing. And for everything in life, there are mentors out there. Okay. Enough talk. Because of this movement here, I may suspect that CPI was higher than expected. Okay? Let me check. Wednesday, Thursday, Friday. This week. Friday, which today Wednesday, right? Core inflation. Consensus for 3, forecast for 4, for previous for 7. Actually it went lower. A little bit lower than forecast. So, this could mean, if the inflation is not coming down, well, actually the inflation is coming down. Not faster than the expectation. Yeah, it's coming faster than the expectation actually. Core inflation is actually higher. 0.2, 0.3 here. Inflation rate 3.7 month over month. Yeah, but it's still higher. It's going higher. Yeah. So we don't need to see the number. What matters is what time this number is going to be released. What time the news event is going to happen. What I am going to do here, I'm going to name this as a spike base. No, I'm just going to leave it like that. Because this is a spike, this is the base of the spike. Oh, actually we can see it here. But anyways, I want to do it there. Because sometimes I just forget about that. Forget about it. The market has a 5-day range, 1, 2, 3, 4, 5. The low is very weak. We have a gap on the upper side. Notice how these highs are quite close, are exactly at the same level in the new contract. Now, which one the market is going to pay attention to? This one or this one? Traders are trading this contract. Most traders, retailers trading this contract. They have forgotten about the old one. What happened here? They don't remember now. They don't care. But there's a lot of information that can be missing. Okay. I want to post something to you. I'll leave the stream up. Get a chance to get some water. I'll come back before the opening, okay? See you soon. All right, all right. I'm back. I am back 10 minutes before the opening. I was I was checking something here. I mean, something that has nothing to do with. There's something that has nothing to do with what's happening in the market right now. I just want to share this. I have joined Top Step, this firm that supposed to fund traders. I was checking here. You know what kind? I remember when I was member of one trading group on I don't remember the name of this group, but the craziness, right? That the craziness of the traders is just unbelievable. This top step is a little bit more. The traders here have a little bit more market understanding, but some of them are just crazy. I was checking here, for example. You know, they come. It just gives you an idea what kind of people, what kind of trader we are competing against. People just don't have even don't have an idea what, for example, what is the symbol of the current contract, right? Or what's happening, or what the rollover is, what is PPI, or stuff like that. I think we all have been in that position once or before, but it is important to understand, right? To understand that we are there, because when we don't realize that, for example, this, okay, why short? Oh, okay, I misunderstand. That's asking why short, why they want short. I thought that was why, what is a short, right? But it's a question is that also, how do you short the market? Question like that I have read as well. I mean, it's just unbelievable how much we are willing to risk when we don't know what the risk is, and when we start to understand that we lack the understanding, we just walk away, right? When we start to understanding the risk, actually the tremendous amount of risk we may have been taking, we just walk away. This is not for me. This, when in reality we are just starting to improve by understanding. Alright, there are traders that use supply demand zones, market profile. I don't know what ICT is. The conversation that happens in indices. Oh, this is just crazy. This is why. I don't think these are the kind of traders that Nicolas Taleb was talking about. Because this kind of company, I am a retail trader as well, but it could be one of the less favorable. Would be the best thing I can say, right? Because it just clouds your mind. There's just too much lack of information or understanding here. There are some market profile people here as well, and some of them have better or proper market understanding, and but you can see, right, why the successful rate on this business is less than 5%. People don't believe that, right? People don't have that information, that the successful rate in this business is very low. Because I think if you knew that, you will prepare, right? Because I don't want to fail, I need to prepare. And if I do what this 90% of people is doing, the odds that I am going to fail are high, actually. Because how come I expect different results, a different outcome, if I keep doing the same what the unsuccessful traders are doing? When I realize that is when I start to think, okay, I may need to try a different approach to this business. And that's when I discovered market profile, and with it I discovered Jim Dalton as well. Jim Dalton is not a panacea, it's not a magic, not something magic there, something fairy, some fairy that's flying out there, that's giving you the power. I was just going to sign up to you with a magic wand and make you successful overnight. It doesn't happen that way. It's a process we need to go through. It takes time. And a mentor is quite relevant, quite important in this business. He is a mentor. He's old. He's 82, 83 now. I don't have nothing to do with Top Step, but I am trying to have an account funded in this company. I found the process rather simple. It's not that expensive as well. I don't have any link to give to you. You just can go in there and try. The customer service, when I ask questions, I usually send an email. I have an answer in a couple of days. The first time it took like, I believe, 3 days to have an answer. But once you have an answer, you have somebody that is looking. Your cases are assigned to somebody, and the process of answer and having replays is rather quicker. Alright, 3 minutes, less than 3 minutes before the opening. Notice where the market is now. Notice the accumulation of volume in the upper side. Let me see if I still have it here. Notice what happened here. Price here, it had 0 here before, 0. Now it has higher volume here, inside. Not inside this, what that means inside this area, which is above the spike. Huh? It's above the spike. That's the most relevant thing to me. The market is above the spike right now. The scenario that the market opening below yesterday's low, I think that's not going to play. I don't consider this low repair. I consider this low very to be weak. This is weak. Another week here. Another week here. I remember, price is just an advertising mechanism. The late break from yesterday, or the break came from a weak level. I mean, well, not from a weak level, but yes, it's a big level as well. Why I say that? Because it can one tick from previous period high. This high is not good. This high is not good, right? So we have non-excess in the high of this range and non-excess in the low of this range. Which one is going to be taken is the question. And notice where the market is right now. It's right at the center of this range. 30 points on the upper side, 30 points on the lower side. Which one is going to be? Or can this be a sequential trade? No, that also. A sequential trade is a market that takes first one end just to take, and the other one just right after that. Okay? Now the market has opened above the spike. You have a spike here to the downside. The market has rejected lower prices. Oh my god, volume is so low, man. Very low volume. Overall, I mean volume, the Neurostock Exchange Composite. Okay, what's happening here? I cannot see this. What's happening here? Come on, let me see. My charts are not. Oh, look at that rally. Everybody's emotional now. Oh, the market has rejected lower prices. We are going to the upside now. The market is opening inside previous year range. Opening inside previous year range. Advertised shop. Notice where the base of this rally is. The market opened here. Came down, took sell out, and where the market has been bought. From this low, man. Same thing happened yesterday. This low is weak. This is a double reference. This is hardback, overnight hardback, and also previous day low. Inventory, overnight inventory was short. It gets shorter with the spike. So there's a lot of short inventory here. Plus the break from yesterday. Notice where the high has stopped. Can you see where the high is? It's stopping. Check your charts. The December contract is right at POC. That high is not good. Alright, it has been repaired now. Again, the market has got out of the lower range in the daily time frame. what's happening with value? Value is overlapping to low, right? Market has re-entered previous value area. Range. Sometimes, or most of the times, traders just get so excited, so anxious to trade. You know, the market's going higher, I have to be long, I have to be long. Oh, the market's breaking, I have to be short, I have to be short, I don't want to miss the trade. Be patient here, the market is inside, market is in balance. It's inside previous day range. The high of yesterday's range is not good. The high of the 5-day range is not good. The low of yesterday's low range is not good. The low of the 5-day range is not good. This market can't go anywhere. Can't go in any direction. The market hasn't picked a direction yet. There is some indication here, you know, that you have that low, that overnight low, for example, that's coming from exactly, that's a weak low, weak overnight low. The base of this rally or everything that's happening now is weak from the overnight and from the daily as well, and from the intraday. Just be patient. The market will give you an opportunity. And if you don't see an opportunity, so don't take it, right? And if you see an opportunity, but you see the opportunity has left you behind, just don't chase it. Sometimes that is the doom. I have lost so much money doing that, trying to catch the market, right? When I realized I missed the trade, I just try to get. You know, I have to get in, And yeah, the results have been not good. So I have to incorporate that in my trading as well. If I miss the trade, so what? Alright? I'm not going to chase it. Yesterday, I missed one trade. I was so eager to get back, you know, to get in the trade yesterday. Man, it is fight that is very hard. You know, this is a business where you have to be focused. When you are working, you have to be focused all the time. It's just like driving. When you drive, you know, most of the time you are just sitting there, relaxed, maybe listening to the radio. But suddenly, just time after time, you need to make adjustments, you need to take action. But if you lose your focus while driving, bad things can happen. You cannot lose your focus. You have to be 100% focused all the time in driving. You want to rest, just park on the side, take a break, walk, take a nap, whatever you need to do. Same thing for trading as well. You need a break, so walk away from the desk, from your trading desk. Take a walk your dog, take a nap, do something. Distract your mind. Relax your mind. Traders are now trying to get long in this market. As they saw the market going high, okay, you are going to this, going all the way up here. It's a lot of chop here. There's many things we need to consider. The situation of the overnight inventory. The downside, the rejection of lower prices here. The buying coming from exactly, adding another weak level here. There's a lot of inventory here, a lot of buying that happened here, and on this terrible level for me. This could be just, the lack of volume tells me that this is just a counterreaction to this overnight inventory. How much volume we have? The composite has 161,000. It is 10 minutes. 3 times that would be 440, which is about the same volume we had yesterday. So not much going on here. Not much going on. Please let me know if you have any questions. Or comments. Did I miss something? What do you think about what I'm talking? Is baloney? What are your thoughts? Of this market? Okay. Look at the chart that's happening here. Where's value? Value is overlapping to lower, right? Value is lower, the market has got back inside previous day range. Value area. That ridiculous, very obnoxious POC. Yesterday's POC has been taken back, has been repaired in both contracts. In trading, one of the important things that we learn is the location. When we start to understand, when we start to read the market, the structure of the market, how weak the structure of the market can be, we can also see the structure. And when we take structural trades, it is easier to place our stops, right? What I mean with this is, I want to open yesterday's trade. And remember, context is very important as well. Yesterday, when the market took this high, you don't have upside continuation here. One trade could have been here. The upside trade, but the stop has to be really tight here. Really tight, because the market has already. If you were present yesterday, you got this high here, this spike that we have here. The overnight has a bunch. It was just like this. It has a lot of stops here, and the way how this traded to the upside more likely was those stops being triggered. And when the volume dries here, it just refuses, not just refuses to go higher, but it starts to go lower, 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 quite fast. Higher prices are being rejected. As soon as the market enters or re-enters this range, the high that has been taken, you can do your play here. If you have a positive bias, this is the market comes back down here and comes back inside and rejects lower prices and come back up. This could be your long. And the stop is right here, one tick below. Very tight stops. My trade was to the downside because I perceived this was just this stops being triggered and we had this Apple thing going on. Something happened there. Trigger was the catalytic the market needed to trigger the stops here, but higher prices were rejected. Higher prices were rejected. And as soon as the market get back inside this range, that was a short. And the stop was above this high. I think that's location, right? That's location. But the risk here was a little bit higher because the market was going to the upside. Once the market took this low out, that's why the stop is high. Once this market took this low out, it changes. The market changes. There's change in the market because there's not an upside trend anymore in the intraday. There's change here that happened, and you can move. I can move my stop maybe up here, right? Because the market can retrace all the way up to here. The closer it gets to this level, the riskier it becomes because it can actually, have some. But the thing is, location. The location of this trade here was important. You have the market, the structure of the market. It was not breaking this period here. It was not breaking this, not breaking this, not breaking this. It was something relevant in the daily time frame. It's not the same coming here. You go short here. What is your reference? The market needs, or the market can come all the way up to here, and it still the option be to the downside. But if you are here, you know right away. But this is just a particular, especially for what happened yesterday. Okay, it's cannot be applied for any other day because the most usual could have been here, right? When there is change in the market, another short could have been here, down here, or maybe even when traders start to understand the downside to the downside, let's sell as close as possible to this high and taking this high out. That's the stop. All right, let's go back to what the market is doing. There's accumulation of volume here, nice volume there, over 10,000 here in this area. The market couldn't take this high volume. There's a high volume area here. The market couldn't get inside this high volume area. No sir. It didn't get back inside this high volume area. So we have 30s, almost 30s here as well. It dries, but the taper is better in the upper side than in the lower side. Still, not opportunity. I haven't seen an opportunity yet. From the intraday, you can see how the market gets back inside this high volume area from this period, just the center, right? Now you check the daily, and notice how it comes to this high volume area here. This is the daily histogram. Nice taper, comes back up here, but it just dries here. It dries. And volume starts being accumulated around this one. This now is bigger. You can see red here, a lot of red, but the market just rejected. It doesn't reject the high. There's a lot of volume here in this area that can force the market to the downside, to the upside, can fuel any upside movement, but it just dries here. You see the market dries. You see the market makes another attempt and dries again. If it dries again and dries again and dries, then the action to the upside will be a fail, will be failing, right? And the market may start getting too long actually, and may need a break before another attempt is made. a lot of things going on, right? And that's why I say, for me at least, it's very hard to trade two markets because the information that you got from one market can be just overwhelming. There's a lot of information we need to process. And having two or three markets at a time is really, really hard. Now, the bond market, notice what's happening with the 10. It has a huge clean here. And now it's rallying. This has removed all the loans from this day, and a lot of new loans come back in. I like the fact it's exactly from this low. That's a weak. That's a weak low. This is the 30. The 30 has come back inside this 2-day range here. The market is more focused in the 10 year. Now these two highs are about to be taken. Market is back inside this range. This is a look below. Is this a fail? No, I don't know. This has good access here. But if the market rallies here, this is going to relieve some of the pressure to the downside, all the downside. I think the June contract is still out of the window. It may prevent any rally here. Because the law is just so weak, man. We may have a rally maybe next week if everything remains as today. Not what the law, what the market is doing. Well, that's a quite. This is quite a retracement, almost to the opening price. Oh my God, look at the volume. Look at this. How low, really low volume, brother. Really low. We still have 10 more. I thought we have 5 minutes, less than 5. We still have 10 more, almost 8 more minutes. It could be about the same. I suspect it's going to be lower. When this starts to happen, usually the first half of the first period is when the bulk of the volume is. If the pace does not remain, usually tends to close lower than the previous day. I think that is going to be the case today. It looks like it's going to be the case today. Now, for value to move higher or inside previous day value, B needs to open or trade, or most of the B or the period or B period has to be inside previous value area range, previous day value area range. The market is still in range. Tomorrow we have PPI. Notice where this market is being bought from. Do you see where the market has been bought from? The opening price. It come down all the way to the opening price and now it's rallying from the opening price. That's not a good sign for the loans. A low is not good. Okay, let's see if this market repairs a low. I want to see how far it goes. It may go just a couple of ticks and then come back. But remember, the structure of the market being low is very weak. Now, where the market was bought now. Previously was bought from opening, now has been bought from settle. Exactly from settle. It's just an indication of who is doing the buying here. Alright, the market is making an attempt. Another rally here. Came back all the way to halfback. Can you see where it's trading through? This halfback is overnight high as well. Halfback high to halfback. It's selling, buying from there. A strong market doesn't stop there. Still market just goes through, maybe come back once and then boom, keeps going high. That's not the case today. The selling is coming from halfback, the buying came from sell, came from the opening price. Short time frame traders here. So far, the most important piece of information we had is the rejection of lower prices. The spike, the spike, the downside, the spike to the downside has been rejected. Alright, unless you have any questions, it is 10 o'clock. I'm going to call it a day. I wish you an excellent trading day. Stay safe, be patient, wait for an opportunity. If you have patience, the opportunity will just show itself. But we need to be present. Huh? You need to be present and be aware of what's happening. There's some selling coming in this area, that came in this area, some volume, big blocks there. If the market takes that area back, that could be a sign there. Let me show you what I mean with that. I'm going to just take data here for my charts. Okay, this is what I mean. This area has high, not that much actually, but this concentration of volume here. I have back and forth, a lot of concentration, back and forth, this area. You have volume here, the market, there's a lot of volume here, but the market just couldn't get into that. It's volume is accumulating down here, and that could be a rejection or acceptance of this volume. But rejection, we see something like this. Maybe the market coming down here and they try to go higher and volume just rise, cannot get above this area. That's the lower case. The scenario to the lower side. The upper side would be the opposite, right? Market coming up here, maybe close to this level, and then trying to break, and volume rise, just like happened here, but in the opposite direction here, and cannot take this one. Okay, that has been taken, so that's not the case. And just really a lot of chop here, very chop market today. But be careful out there. I wish you guys the best. If you have any questions, you will know how to reach.